Against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on.
Putting that extra 50% tariff on Chinese goods, if Beijing does not reverse its retaliation of 34%, the addition would bring the total tariff on China to 104%.
Big breaking news coming out today, April 8th, 2025. Let's take a look at the latest headlines. Trump tariffs. The White House says 104% China tariffs take effect at midnight. Now, you've been seeing all of the tariffs that have been hitting. We have seen a lot happening since Liberation Day. Let's take a look. Just a couple of days ago, Trump rolled out sweeping tariffs as he deems deficit a national emergency. Now, as I mentioned, this was Liberation Day, and we have seen the markets shaken as a result of this. And take a look here. You can see the S&P 500 just dropping off here recently at this announcement. There's been a little bit of a rebound today, April 8th, 2025, but it's just a 1% rebound, they're saying, and it's kind of slowing down. It's losing steam here. So the question is, where are we going to be going from here? Well, Trump said, don't be a panicking. Right now, there is massive amounts of requests for negotiations from various countries.
The Trump administration says nearly 70 countries now are looking to come to the table to renegotiate their tariff deals with the United States.
I can tell you that there are 50, 60, maybe almost 70 countries now who have approached us. So it's going to be a busy April, May, maybe into June. And Japan is a very important military ally. They're a very important economic ally. And the U.S. has a lot of history with them. So I would expect that Japan's going to get priority, just because they came forward very quickly, but it's going to be very busy. And if President Trump, again, gave himself maximum negotiating leverage, and just when he achieved the maximum leverage, he's willing to start talking.
China, however, as I mentioned, has been the holdout. And the question is, where do we go from here? Are we going to be entering into a massive trade war, a tariff war with China? Or are they going to be coming to the negotiating table so that way we can stave off any financial crises or issues? And also, a lot of people are wondering what's going to be happening with my retirement accounts, my investments, with all the tariffs taking place. Also, people have noticed gold is now hitting 3,000. Silver has hit 30 as Trump's tariff medicine is crushing stock markets. And you can see gold, it has gone up. It's had a little bit of a drop off, but it broke 3,000 as they mentioned. It is now at $2,995. Now, I'm going to be covering the details of tariffs, investing, stocks, gold, silver. I've got an expert with us as well that's going to be giving us some detailed information about what we can expect here. But first, let's go ahead and take a look at these articles, and do me a favor if you haven't done so yet. Hit that like button and subscribe to stay up to date. It's totally free. But let's take a look at this coming out just a little while ago. Now, this says Trump trade fight. Customs start collecting new tariffs on imports from 86 countries at midnight tonight. So just to clarify, this is going to be starting right now. Now, it says President Donald Trump tariffs that will go into effect at midnight tonight, including an expected 104% tariff on China. U.S. Customs and Border Protection say it is prepared to begin collecting country-specific tariffs from 86 U.S. trade partners starting at 12:01 a.m. Eastern Standard Time. U.S. markets sold off sharply this afternoon, heading into the midnight tariff deadline. Tesla CEO Elon Musk is sharply escalating his attacks on top Trump trade advisor Peter Navarro. The president says China wants to make a deal badly, but they don't know how to get it started. Now, former Commerce Secretary Carlos Gutierrez says the U.S. and China are in a full-blown trade war. Newly confirmed U.S. Trade Representative Jamieson Greer testified before the Senate Finance Committee at a hearing on the president's 2025 trade policy agenda. European Commission President Ursula von der Leyen says the EU is willing to negotiate with the U.S. on tariffs, yet also is preparing to retaliate. And two billionaire Trump backers, Ken Langan and Ken Griffin, are furious about the tariffs. And you can see here, 9 minutes ago, Trump says the U.S. is doing very well in making tailored, tariff deals. As we're hearing, country after country is coming to the negotiating table. But right now, the world is feeling the effects of this trade war. We're hearing that it's preparing with China and tariffs striking left and right. Deals are coming about. So that is the breaking news coming out today, April the 8th, 2025. But let's go ahead and dive into the details of what this means for us. So I've got an expert with us today, Kevin Demerit, CEO of Lear Capital. He's joining us today. Thank you so much. We appreciate it a ton, Kevin.
Yeah, no, thanks for having me on the program.
So Donald Trump said, like, be patient, right? Don't panic. But we're hearing we're not really sure like how long this is going to take place. When do you think we're going to be able to take a step back and say, okay, tariffs, this is working or this is failing, this is successful or this is not?
Well, Steve, I listen to these people on television and in the news, and they're, oh my God, this thing's a complete disaster. Well, if you think about it, and you had a horrible debt situation and you needed to pay down your credit card, you're not going to have this fantastic situation going on that you can go out to eat more, go on more vacations, buy more clothes. That isn't what happens. The exact opposite happens. So there's a little bit of pain involved. And when you have a deficit at $36 trillion and you have a trade deficit the size of our trade deficit, you need to start fixing those problems. There's going to be some pain involved. What do you think is going to happen if you start paying down your credit card? Life's going to get better? No, it's going to get worse. If we want to fix this problem, there's going to be a little pain. But what they do not come across well with, in my opinion, is when do you know it's bad and when do you know it's good? All right. So what are the things we look at to say the tariffs are working, and what are the things we look at and say the tariffs are not working? Well, I think if you look at the things that tell you if the tariffs are working would be a shrinking trade deficit. That would be the first thing. An increase in manufacturing in the United States. That would be number two. Reshoring announcements, which we're already seeing. People coming to the negotiating table. You have 50 countries at the negotiating table. Yeah, sure. China isn't at the negotiating table, but if you have 50 countries that negotiate with the United States and tell you they're going to do something positive, I promise you China will come along, with something there. If you get an increase in tax revenues because of the tariffs, or you have job growth in the sectors where tariffs are in place, those are the things that make the tariffs successful. Is it going to happen tomorrow or the next day? Probably not. On the other side of the equation, what are the things that are going to tell us that the tariffs are not successful? Well, it's going to be rising consumer prices. If they just get out of hand, then we've got too much inflation. You're probably going to have a disaster. If U.S. manufacturing suffers, then the tariffs didn't work, right? We're not picking up manufacturing here in the United States. If we get a huge retaliation by trade partners, but that isn't happening. You got one country, China, saying no, maybe a couple, and you have 50 saying yes. So for the most part, that isn't happening. If you have supply chain disruptions, which I don't think are going to happen, if you have a decline in business investments because the tariffs create some uncertainty about future costs and regulations, then maybe that is an issue. Or ultimately, if you just have lower GDP growth. So before they go and yell and scream that the stock market is falling, that was overvalued anyway, and use that as an excuse to say tariffs are going to be bad for the economy or good for the economy, there should be a list of, like I just explained, of good and bad. And in 4 to 6 months, let's look and see how much of the list is on the bad side or the good side. So you have some sort of measuring stick to see if this is all good or bad in reality, as opposed to the knee-jerk reaction we're seeing everybody move off right now.
Yeah, I think I had seen Trump release a post that said, "Don't become a panican." Like,
right.
I think like a panicking like Republican or something. I can't remember what it was, but he was saying like, "Yeah, this is going to be some short-term pain that we're going to be experiencing. Brace for it. Hold on, but when we're done with this, it's going to help so much more." And it kind of like you said, like it's going to be this, snap. It's going to be painful at first, almost kind of like maybe hitting the gym after you haven't done so in a long time. Like when you first get in there, there's going to be some serious, like those muscles are working again. But after a while, if you stay consistent, it'll get back on it. It's kind of like that, I'm imagining.
Yeah, right. Anything positive in life, you almost take 2 steps backwards to go, 5 steps forward. And it's the same here. If people really want to fix the country and they want to fix our trade deficit and the the position that the United States has been in is that these other countries have had tariffs or unfair trade. You know, we'll take all of their goods into the United States. We couldn't ship anything to some of these countries, and now they're coming to
Hmm.
the negotiating table. So before, again, everybody makes these knee-jerk reactions. Why don't you spend some time, make a list, and say, here's the list to let me know, and it doesn't have to be my list, but uh, here's where we know it's going well. Here's where we know it's just absolutely failing, and make your decision and give it a little bit of time to work through the economy and see what happens here. But look, the path we were on is unsustainable. You can't have the trade deficit we had. You can't have the deficits we had. So that turns out to be more pain later on down the line.
Yeah. Prior to him really diving into the tariff proposals and the Liberation Day, I think I wasn't aware of the fact that there were so many different countries that were hitting us with significant tariffs, and we were essentially not doing anything. I think I heard something like Canada, I can't remember who it was like 300%, something wild, and like we had basically nothing. And so people were saying that him proposing some of these tariffs on these other nations, and it might not be Canada, I might have that wrong, don't quote me on that, but it was like, hey, this is just reciprocal. We're just trying to even things out to try to help out our nation, America, get things on track. So he's really brought a lot of attention to it. And I think, like you said, we got to do something, because the path that we've been on with the amount of debt that we have and the direction we're going, the future does not look good if we don't change things, and soon.
Yeah. Look, the European Union had a woman, I can't remember her name, yesterday on the television, and she says, look, we called President Trump and we told him that we would have zero tariffs on certain products, going back and forth. We want to play fair. Well, guess what? If you're lowering your tariffs now to be fair, then it wasn't fair before. I mean,
Yep.
that would be the logic of that statement. And so if everybody just calmed down and listened to these countries, they want to play fair. Sure, now you want to play fair, right? But you were playing fair prior, and that's the thing. Look, Democrat, Republican, it doesn't matter. Make your country strong. If this is the right thing to
Yes.
do, don't start beating somebody over the head because they're in a political party. Back up for a second and say, is this good for the country? Is this good for my children long term? Those are the things I think people should be concerned about, not if you're Republican or Democrat.
Yeah. How are these tariffs going to be directly affecting gold?
Well, look, to answer the question is how is it going to affect gold in the short term? With the stock market volatility that we're seeing, you saw the gold market pull back a little bit. And the reason why is that it's doing its job, just like we saw back when 2008 happened when the stock market, when we saw COVID happen in the stock market. There's an enormous amount of leverage in the stock market. And so when you see these massive falls, people get something called a margin call, meaning that if you purchased, if you had a brokerage account at $100,000 or so, you can buy up to 200,000. And a lot of people did that. And now when the market's coming down, they'll get something called the margin call if their deposit, their initial amount isn't large enough, just for people who don't understand it. And we've gotten an enormous amount of phone calls where people say, look, I got a margin call, I need to liquidate. And gold is the thing that's up, it's liquid, and it saved them. Same thing we saw again in 2008 and in COVID. So you're starting to see a little bit of pullback in gold, and now today, back up $30, back up over $3,000 an ounce. So I think in the short term, you're going to see a little bit of volatility. I wouldn't see gold probably falling any lower than 2,950, 2,900. And then usually after that, you start to see a lot of people start to come into the market because they want to hedge against the potential of inflation with the tariffs and the uncertainty that potentially is going to happen there.
What about silver too?
I mean, silver to me is just one of the most undervalued assets. If you looked in any category of assets right now, and the reason is that silver is really a double play investment right now. So if the economy does fantastic, then the silver being used in solar, batteries, medicine, an enormous amounts of industrial applications, the demand there is already exceeding supply. So we're exceeding supply by about 200 million ounces per year at this particular time, and it's very hard to kind of open a mine and make up that 200 million ounce difference. So I think the silver market does well in a great economy. It does even better in a horrible economy, because if we look back when gold was $2,000 an ounce right after 2008, going into 2010 when gold had moved up, the price of silver was $49 an ounce. Now the price of gold is $3,000 an ounce and the price of silver is $31. So if we did a little math, the price of silver, Steve, would have to go up to around $72 an ounce to match the high that we saw when gold was at 2000. I don't know if it's going to get to 72, but I would not be surprised if you don't see it in the $55 or $60 range, in the next 48 months. Even Goldman Sachs came out. They said, "Hey, look, gold could be somewhere around $3,500 to $3,800 an ounce by the year end." So that would be a nice increase in the gold price. But gold has kind of seen an increase, and silver follows the gold market. So I would recommend, if people wanted to invest in gold, make your percentage of gold smaller and your percentage of silver a little bit larger, because your downside risk is smaller and your upside potential is tremendous.
That is exactly like what I was just about to ask you, is like, of the two, which one would you say at this present time would be the one that you should maybe steer towards just a little bit more percentage wise? So it sounds like you're saying silver right now.
Just where the potential is in silver right now, it's really, compared against a lot of other investments out there, I think it's fantastic. Not just because I'm in the business, it's just I don't think you can match up to an investment that can do well in both the environments that we may have here in the economy.
Wow. So as these tariffs affect the global markets, who do you suspect is going to be buying up gold and silver? Is this going to be governments, businesses, individuals, all of the above?
Oh yeah, look, in the last 3 years, Steve, central banks have bought record amounts of gold. They've purchased just absolutely gigantic amounts of gold, and thus you've seen the price of gold, skyrocket. I mean, you showed the chart there, and it's going to continue. China has been buying, Russia's been buying, Brazil has been buying, India's been buying. A bunch of other central banks are going to continue to buy gold, and that's why Goldman Sachs believes the price of gold will be $3,500, $3,800 an ounce. Because when you're a central bank, you're not a day trader. You don't buy today and sell tomorrow. You buy today and you hold it for 10 or 15 years. You're not going to see that gold back on the market anytime soon. The second group of investors is going to be the institutional investors, because there's so much uncertainty in the market based on tariffs, the value of the dollar, inflation, the wars, just probably more than any time in history, you've got these things happening all at once that make markets very uncertain. And the one certainty in all of that would be the gold market or the silver market, right? They've held up forever and ever and ever. So I think based on those two, because they have the biggest amount of money, that's the money flow you want to try to watch and see what's happening there. Central banks above anybody, because they just have more money than all the institutions put together. And you're starting to see them compiling back into the market. And that's why the gold price really hasn't dropped more than you've seen. Typically, you'd see it maybe down 10 or 12% when the stock market falls this much, and it kind of went down about 6%, and then it started right back up. So heavy buying on the central bank side and the institutional side will continue to drive the markets.
Nice. So you and others have advised that gold is a long-term play. With these new tariffs, is that still the play, or is there an opportunity for speculators to see some short-term profits from gold?
Yeah, to me, I don't look at the gold market or the silver markets as short-term plays. I think people lose a lot of money trying to play, short-term in almost any market, really. I think there's an incredible opportunity over the next 24 to 36 months in the silver market, as we kind of went over. I just think it's one of the best investments out there right now. But, think about gold like planting a tree. You plant a fruit tree, you don't dig it up in 2 weeks because it isn't blossoming. You kind of need to wait around and get the fruit from it. And it's the same with gold. But if people stepped back a little bit and looked at the nature of gold since the year 2000, which is a fairly long time horizon, the price of gold at that point was around $255 an ounce, hovered around 255 to 275. Let's call it 300. Here we are at 3,000. You got 10 times your money for just holding gold since 2000. The stock market was 12,000. It's 37,000 today. So that got you, let's say, 2.5 times. The gold market has been outproducing the stock market since 2000. For 24 years, it would have been better to hold some gold than the Dow Jones.
Wow.
I think that shocks some people. And you have to ask yourself why. Because the governments around the world have continued to print money and print money and print money. And if you put an increased demand on a fixed supply, so you have a bunch more money on a fixed supply, then the item with the fixed supply is going to go up in value, especially when it's a monetary, it's an alternative to money, even on the central bank side. So you should continue to see gold do very, very well over the next 2-3 years until we get our deficits and central banks quit printing money. But it's a long-term investment. You shouldn't speculate in the short term.
Okay. Yeah. I've speculated on certain things and I always lose money.
Yeah, hard to time
Yeah.
markets.
So for somebody that's like, hey, I do want to do gold or silver, like maybe they've already got some other portfolio, or maybe they want to do a little bit more. Is there a certain percentage that you recommend? And I know everybody's, situation is different. Do you have any guidance on this?
Yeah, I mean, look, if you're older and you need income for retirement, you want a smaller portion in gold. If you're younger and you want to build a base for your investment foundation, the percentage can go up to 20%. When you have an economy like we have right now, where there's a lot of uncertainty, then the percentage may be higher. I tell people all the time, the best thing you can do if you have a really good financial planner is call them up and have a conversation with them. If you want to hold physical gold, most of those companies, most of those financial advisors don't have physical gold. So we work with a lot of them and we can supply them whatever percentage of gold they think is best in your portfolio. So if you have a financial planner, talk to them a little bit, sit down and tell them you want some physical gold, and they probably, based on your situation, will tell you what percentage, and then give us a phone call and we're happy to, supply that percentage. If you don't have a financial planner, then you really should take a look at where you are. We can help out a little bit, but we try to have everybody make their final decision based on what's comfortable for them in their financial situation.
So if somebody doesn't have a financial planner, they would be able to call you up and kind of you guys will walk through things with them, and in the end they'll make the decision, but you guys have that available for them?
Yeah, well, we're here to guide you. We're not financial planners. So I just want to make that clear. We're not financial planners. We're experts in precious metals. I tell everybody I'm not smart enough to be a stockbroker because I can't sit there and research 13,000 stocks and 10,000 mutual funds and life insurance, health insurance. I'm just not that smart. We're experts in one thing, and that's precious metals. We'll give you what our best recommendations are, and then, like I say, they get to choose from there. So yes, we'll help you and give you some alternatives and some suggestions, but they have to make the final decision.
Now, in addition to that, you also said that there's a special opportunity for anybody that's interested today as well. A very generous offer that you had mentioned.
Yeah. What we'd like to do, I mean, we love sponsoring the program. You help us educate people on precious metals and a lot of other things through your program. And so with everything going on right now, what we wanted to offer was a $500 credit in every single person's account that calls and just mentions your show. So if they go to the learram.com landing page, we will know that came from you. We're going to just automatically include $500 in their account. Or if they give us a phone call at 800-411-2430 and mention your show, we'll include the $500 credit into the account, and they can use that for any of the shipping, for retirement account fees. If they want to transfer some money over into a gold-backed IRA, we'll cover the fees with that $500. It won't cost them a nickel to do that. So we'll put that in anybody's account who gives us a phone call or goes to the landing page.
If anybody wants to take advantage of that, that's an additional $500 for the account. And you just go to learram.com or that phone number as well. I'll put it on the screen so people can see that as well. So Kevin DeMerit, it has been a pleasure. Thank you so much for letting us know, keeping us up to date on what's happening with the markets.